Over the weekend, Silicon Valley Bank collapsed and fears of bank collapses ran through the market. How should you be talking to your clients about this? We're going to discuss today on Today in Mortgages. Hey, dream makers, welcome to Today in Mortgages, where we try to make sense of today's news in real estate and mortgages. Each episode, we're breaking down the clickbait headlines to make sure that you understand what's real, what's hype, and what you should be paying attention to. I'm your moderator, and today you can call me Too Big to Fail. And today I have special guest Matt Kiker. He is the president of Network Funding and also president-elect of the Texas Mortgage Bankers Association. Matt, welcome to the show.
Thank you very much. I'm excited to be here.
I can tell. Thanks, Matt. Well, I had you come on today because I think you have great insights into the mortgage industry as a whole. And something crazy happened over the weekend. The SVB bank collapsed is something that we haven't seen happen at this scale in a long time. Banks collapse all the time, but they don't really hit the news like this one did. And it was a big deal over the weekend. A lot of things happened. But real quick, Matt, can you just tell us high level what happened?
What happened last week was that they tried to issue some more shares so that they could cover the monies that they needed to have in their bank for depositors to come and take them. And when that news got out there, it caused a little bit of a panic, and it made just a run on the bank. And so depositors were trying to get all their money. It caused a problem, and then the government had to step in over the weekend.
Yeah, and step in, they definitely did, Matt. So in the aftermath, the government came out, and obviously this bank, like every other bank, is FDIC insured up to $250,000 per depositor. But they stepped in a big way and said they're going to insure and give access to all their depositors for the full amount of their deposits. And so that's abnormal. And it was kind of to quelch fears, because my second question for you, Matt, is that looking back in the past, the biggest bank to fail in recent history was Washington Mutual in 2008. And that obviously came in the midst of the financial crisis, but that was a totally different situation with mortgage-backed securities. Talk about how this is different.
It is totally different. That whole thing, well, Washington Mutual really was the first of many, many more banks that failed due to the subprime crisis, to all the mortgage problems that were out there. The credit quality of the assets that were underlying the WAMU deal were people that weren't making their payments on houses that were losing value. So it's a totally different thing. It's not something that's going to have the same domino effect that we saw back in 7, 8, 9, and beyond, with hundreds of banks failing. This is really a different type of situation.
Yeah, that's right, Matt. And what was happening at SVB was that they were going in and buying long-term government bonds. Interest rates have risen, obviously, that we've been talking about here on the show a lot. You've seen it in the market. You're in the market, when those interest rates rise, the value of those bonds decreases. And so when they were having trouble at the bank and those rumors started to spread, people started to come and withdraw their deposits, and that bank was having to sell those bonds at a loss. And so that's kind of what happened here. And it's not something that is going to affect mom and pop bank across the country. And so when people heard about this over the weekend, there was a lot of fear. And I actually saw a screenshot on a group text that I was on from a realtor that was saying, from a buyer that said, we're really worried about locking in our mortgage this week. And it was due to, this banking crisis is what they were referring to. And that to me just really showed how that this news can really affect buyers out there in the market. So this is something you should definitely be talking to your buyers or clients about. And we want to make sure that you understand it's going to be okay. So if we're talking about this with our buyers, how could this affect our industry, and will it?
Well, of course, everything that brings volatility to our markets affects our industry. We see it all the time. Every time a new number comes out for inflation, every time the Fed says they're going to raise or lower, or they're going to do something with rates, the market responds with what they think is going to happen, or they try to get ahead or watch of where the puck's going and try to be there. So yesterday we saw the markets open up very strong. We had rates down. It was a great day to lock yesterday, especially at the first part of the day. And then at the end of the day, we saw rates start creeping back up. This has really put a spotlight on banks. And then, of course, the government and backing up all the banks. We're likely to have more volatility. And that's something that I think we've just been stuck with this year.
Yeah, most definitely. And so when we're talking about this with clients, I think what the important thing is that this happened and we saw the market respond, and then we saw the market re-regulate itself. And that's going to continue to happen. The Fed's going to continue to, do what it needs to do to tamp down inflation. There's a lot of chatter yesterday. They're definitely not going to raise rates now because this happened. And the reason this happened is because the rates were going up and they felt the need to sell at a loss, and the bank collapsed, and they don't want other banks to collapse. And, we don't have a crystal ball. We don't know what's going to happen there. But I think what we can learn from the lesson of the last 6 to 9 months is the Fed's going to do what it says it's going to do. And so when we're talking about rates, like Matt said, yesterday would have been a great day for you to lock. Today might be another day. You should be checking in with that if you're talking to your buyers to make sure that they understand, hey, this blip is something they could use to their advantage. Matt, any other thing you want to add about what we should be telling our customers?
Yeah, it's the same thing that you really just mentioned. We know that inflation still is coming in at 6. It's lower than what we have had in the past, but it's not 2. And that's what the Fed has said that they're trying to get to. As of this morning, I think I saw that most people think the Fed's going to raise by a quarter. That could change by this afternoon. Again, we're seeing rates lower than they've been. Today's a great day to lock. Who knows what's going to happen in the future, but I feel like right now we have a little opening where we could do a lock.
Absolutely. Before we get to our final thoughts, I just want to break real fast and let everyone know out there. Obviously, we're talking about volatility right now. The market is crazy, but you can continue to trudge forward. And what you need to be doing right now is marketing yourself well. So we've put together a free resource called 5 Ways to Get Ahead While the Market is Down. And you can go and get that free resource at todayandmortgages.com/marketing. That's todayandmortgages.com/marketing. It's completely free. Go check that out. Get ahead while you can. Hey, Matt, you have anything you want to add today about SVB, the market, anything while you're on today?
We'll just continue to see things change in our market. I don't think the banking system's going to fall apart. Our government said they're not going to let it happen. And it's just a totally different time than the last time we had any kind of bank failures. But I'm sure we're going to see more about these and others possibly as they kind of point out problems with crypto or whatever types of lending that those banks are doing.
Like Matt said, things are going to happen, but we got to keep calm and carry on. So that's a wrap. Thanks so much for tuning in. Thank you, Matt, for joining us. Everybody out there, if you enjoyed what Matt talked about, and if you enjoy our episodes, check out the Grow link below. Find out more about network funding, how you can be a part of the best network in mortgages. And if you want to help us out, you can click the like, share, or subscribe button, and however you are consuming this show or podcast. We really appreciate that. It helps us out a ton. And until next time, thanks for joining us on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.